we would like you to join us on better remittances data for better decisions. So let me start telling that remittances data are far from perfect, because remittances are millions and millions, even billions of small payments. From the compiler's perspective, it's difficult to measure so many tiny transactions, and the level of data available to compilers is very diverse, and so is the methodology they are using. Achieving better remittances data will require new systems, new policies, more technology, and more granular data. In the next 3 days, we will spend some time looking at this based on our sample of 34 central banks and 10 technology solutions, with the goal to make remittances more accessible, more convenient, and less expensive. But also because remittances are the gateway to other financial services like loans, pensions, or insurance, and better remittances data impacts better product development by the industry. So to start, I would like to share the agenda for today's webinar. First, our lead specialist from the UNCDF Migration and Remittances program will give us the opening remarks. Then UNCDF will present a few insights from the work that we have been doing and from the paper that we published in December, Lessons Learned on Building an ITRS, that gathers reflections from central banks in countries that have pioneered advances in remittances data collection. After, we will have presentations from 3 panelists, 2 from central banks sampled in the paper, the Central Bank of the Philippines and the Central Bank of Colombia, and 1 global provider company offering end-to-end business intelligence solutions to central banks for the collection of remittances payments, SWIFT. Finally, we will have time for questions from the audience. So we have an exciting webinar ahead of us. Let's start. But before, let me provide 3 logistic pieces. 1, interpretation is provided in French and Spanish. So as a participant, you will see at the bottom right, interpretation icon, a bubble. You want to use the interpretation services, click on interpretation and join the other audio channel. If you want to go back to English, just click on English. 2, attendees can interact via Q&A in the chat. Please use it. To ask questions during the webinar, please use the chat. Please submit your question at any time during the webinar, mentioning your name, your organization, and to whom it is addressed. We will not take questions verbally. And third, the presentation and recording will be emailed to all the participants. Now I would like to introduce my colleagues and today's panelists. Bios are also in the website, detailed bios for your reference. First, I would like to introduce my colleague Amil Aneja, lead specialist, and Ibis Castrati, balance of payments specialist from the Migration Remittances program at UNCDF. Today also we have as a panelist, Maria Angelica Villena, Deputy Director from the Department of Economic Statistics at the Central Bank of the Philippines. We also have Maria Mercedes Collazos, lead economist from external sector area at Central Bank of Colombia. And finally, we have Michimaru Onizuka, Senior Business Manager from the Compliance and Data Expert Team in SWIFT, Belgium. So now, let's welcome Amil Aneja, lead specialist at UNCDF, for our opening remarks. Amil, over to you.
Thank you, Paloma. Good morning, good afternoon, and good evening, everyone. It is a great pleasure to be welcoming you all at the first one of the 3 UNCDF webinars on better remittances data for better decisions that will take place today, tomorrow, and on Thursday. The United Nations Capital Development Fund is a UN's capital investment agency for the world's 46 least developed countries. The UNCDF agenda for migration and remittances falls within the organization's broader global digital strategy of leaving no one behind in the digital era. Migrant women and men make up 4% of the global population, and they collectively send hundreds of billions of dollars in remittances every year, contributing to the financial stability and supporting households in meeting their own sustainable development outcomes in the developing economies, particularly the least developed countries. With a record USD 768 billion globally, as per World Bank estimates for 2021, remittances exceed global foreign direct investment. Low and middle income countries received almost $600 billion. In more than 50 countries, remittances constitute more than 5% of the country's GDP. And in almost 30 countries, it constitutes more than 10% of the GDP. As the road ahead is increasingly digital for all of us, it is imperative that the digital financial ecosystem is inclusive and considerate of the needs of women and men migrants who constitute the 4% of the global population. And as the migration grows, it becomes even more pertinent. Embracing migrants necessarily requires working on remittances, the universal feature of migrants' financial lives, and it requires working on remittances from every angle. How migrants receive their wages, how they send a portion of that money back home, how their loved ones receive the money, how they use it, and the technologies and regulations that underpin every link in this complex value chain. In our work on remittances, UNCDF is taking just such a 360-degree approach. With the regional economic commissions, we are working to harmonize the cross-border remittance policies towards economic cooperation and integration. With remittance service providers, we are building the capacity to understand migrants' financial priorities and design the products accordingly. For providers of other financial services, we are equally working hand in hand with them to design and deliver value-added products, insurance, savings, credit, pension, investments that could be layered onto the digitized platforms. For migrants themselves, we are working with private sector partners and regulators to ensure that the focus on greater voice and choice, controls and decisions is coming hand in hand with the focus on the financial and the digital skills for migrants and their families back home, so that they are more enabled to trust the responsible digital channels, to move beyond cash, and accordingly embrace the benefits that digitization on remittances can deliver, especially on the transaction cost. Finally, with national governments, we are identifying which policies and regulations will allow remittance service providers to expand their outreach towards formalizing remittance flows. Frameworks and guides towards which have been published for central banks beyond UNCDF's immediate remit to also consider. It is through our engagements with central banks and the private sector, especially across LDCs, with whom we have been working closely, that we have been consistently asked to support in building capacity towards monitoring and capturing remittances better, including those coming through the informal channels. And as we all know, cross-border remittances are very challenging to measure because the market is fragmented amongst many diverse provider types. Central banks estimates pay particular attention to remittances transferred through official channels, but it is often based on a narrow definition of reporting institutions, and in some cases also applying thresholds that withhold the state of inbound remittances from private sector partners, especially fintech, who have the potential to leverage this market opportunity to deepen the financial sector through a range of nano financial products. Additionally, remittance data are also predominantly reported at highly aggregated levels, which severely limits their use in developing supportive policy or driving investments. Understanding remittance markets requires more than just measuring access to finance and remittance volumes. It will also require an honest assessment of the quality and use of remittance services that has key positive impact on financial resilience and gender equity. Migrant-centric and gender-smart remittance policies and innovations cannot be made with single high-level estimate of inbound or outbound remittance flows, as complex as it may be. More needs to be done. Therefore, to better service the needs and align incentives of central banks and the private sector, UNCDF has consulted with many central banks and technology service providers so far to improve the collection and measurement of cross-border remittances for informed policymaking, financial product development, and investments. And as a result, with deep gratitude to the central banks who have been very generous with their time to contribute and review over the last 1 year in particular, we have recently published a range of working papers, assessment and reference guides to share those experiences and facilitate building in-house capacity in central banks that may also reduce dependence on external actors for the fundamentals. As we continue to consult with more central banks towards this peer learning exercise, we intend to publish the second version towards the end of the year. This week, we'll present the main findings and insights from our work so far, and I'm extremely delighted to have the Central Bank of Philippines and the Central Bank of Colombia today, who have been very gracious through these consultations with us already and are here to share some lessons with us. Finally, SWIFT, as a messaging network that financial institutions use, will also share innovative compilation methods for cross-border remittances. I hope you join these webinars with as much curiosity as our team has been through this exercise the last 1 year, and I hope you all find them relevant and valuable for your work. I want to thank you all for joining us today and through this week, particularly our panelists, and I look forward to engaging with you all through this week and beyond. All the very best, and thank you, Paloma, once again. Over to you.
Yamil. So now over to Ivish, who will present these few insights from the paper Lessons Learned on Building an ITRS. Welcome, Ivish.
Yeah, thank you. Thank you very much, Paloma and Amil, for the introduction and for opening remarks. As my colleague Amil mentioned in the opening remarks, the task of measuring remittances is quite difficult, but today I will start with just overall presentation on some of the main sources of information when collecting and measuring data on cross-border remittances. In many countries, and especially in least developed countries, the use of international transaction reporting system and money transfer operators and other remittance service providers are usually used because they are often more cost-effective, fairly accurate, and easier to establish the legal basis. These are some of the advantages of using this system. And today with us, we have two central banks, as mentioned in the introduction, that will be presenting in more detail, the Central Bank of Colombia and the Central Bank of Philippines. The data on remittances is sent or received through these channels are often referred as the data remittances sent through formal channels. However, very often migrants used other ways to send or receive the money, other channels that are often considered as informal, such as cash carried by persons or in-kind transfers that migrants use when they travel or go back home. Some of the main sources that are used to collect the data on remittances, except for the first one, the ITRS, MTOs, and RSPs, are surveys and estimation models. Surveys are used, usually called surveys with migrants or border surveys, and often in some countries they are referred as household surveys that have some information that can be used to measure remittances. And these surveys can be used to as a direct source or to improve the data quality of and the accuracy of the estimates. They can provide detailed insights on the nature of flows, such as gender and location of the receiver of the remittances or the sender. They can provide information on the mode of the transaction and the volume and the direction of the flows. But of course, as every other source of information, these surveys often have some disadvantages as well. They can cost a lot, and some countries may have difficulties to implement them. And for this reason, some countries go for the others, use the other source of information that are estimation models that can be used as using the secondary data. These models are often considered as demographic models, econometric models, and residual models. The demographic models often are based on demographic data such as census or population surveys, and econometric models identify the determinants of remittances that are used and are available. Then they specify a mathematical model to estimate remittances based on these determinants. And often some countries often use residual models that estimate remittances from the data from current account or monetary data and assume that imbalances are explained by the unobserved remittances flows. Of course, there are many other sources of information that countries use, and countries often use a combination of 2 or 3 of these methods to come up with the final version of the data that they publish. And more information on this can be found on the International Transactions Guide, on Remittances Guide from IMF. So you can find more information there about the main sources that are used for measuring cross-border remittances. Next slide, please. Over the past year, as mentioned in the introduction, UNCDF, based with the request from the central banks to provide technical assistance to better measure the remittances flows, we have been engaging in consulting with central banks on how they approach the collection and measurement of cross-border remittances towards an informed policymaking, product development, and investments. I would like to briefly present today the lessons learned on building a transactional reporting system to collect remittances data based on the experience that we had with consulting with more than 30 central banks during the past year. Central banks and compilers have an active role to play on designing methodologies and tools to understand remittances markets and to capture and monitor these remittances flows in their countries. There is an adverse range of experiences, knowledge relating to capturing remittances flows that hold lessons for peers globally. The purpose of this guideline note is to share UNCDF's consultation with central banks globally and share their experiences to assist the central banks in least developed countries in the development of tools and systems to improve the data collection of remittances flows. You can find more information on the paper that we published on lessons learned from these consultations with the central banks that we have undertaken during the year. Next slide, please, Paloma. The paper that was published based on the consultation with 13 central banks, but right now we have more than 30 banks who we have consulted with through the semi-structured interviews with policymakers across geographies, Africa, Europe, Latin America, Asia, and Middle East, to better understand their roles, challenges, and their needs to build and use an international transaction reporting systems to monitor the remittances data. The team also selected carefully technology companies around the world offering end-to-end market solutions to central banks and regulators to collect and monitor and analyze these remittances data. I would like to share with you and again mention that this is an ongoing exercise, and we hope to continue these consultations through the year and revise the following 5 working papers that we have already published every year in order to facilitate the most updated learnings to the central banks and to the private sector. Next slide, please. As the world becomes more digital, there is an ever-growing need for data sources and new reporting instructions. I would like to show you some of the findings that were distilled from the experience with the central banks that were developing and using an ITRS system. Please let me share some of those knowledge that we have learned by consulting with the central banks. What we have learned is that most of the countries have said that the goal of international transaction reporting system is now currently used for the compilation of the balance of payment statistics. And UNCDF is supporting in reporting and analysis of remittances data following the IMF's BPM6 manual. And also in general, full implementation of transaction reporting system continues to be in use in countries where foreign exchange control remains in place, which have only recently, some of them have removed these controls, or which some of them had not the possibility to adopt their reporting systems yet. In general, the use of the ITRS is limited to support the statistics and foreign exchange monitoring purposes or for macroeconomic analysis. In most central banks, that remains an ITRS. The reporting system is that have the ITRS. The reporting is mandatory from banks and forex companies, evolving from the Foreign Exchange Act. All central banks consider that the foreign exchange record system, ITRS, is to be cost-effective reporting system that provides accurate and timely forex and day-to-day monetary information. But what it lacks is the details necessary to compile the data on remittances. And of course, many central banks have also reported their challenges while using ITRS system to measure these data. And these are, however, that when exchange controls are lifted, the quality of data reported by banks and other reporters can, however, deteriorate quickly. Another challenge mentioned was that small values are not captured if there is a threshold in place in the ITRS. For example, in Indonesia, the central bank uses ITRS transactions with a threshold of over $10,000. So that reduces the quality of data used for measuring remittances. A recurring challenge for central banks is also connecting ITRS data with other sources to enable comprehensive analysis and support policy formulation and implementation. Upfront costs are high for ITRS for some countries and have enhanced several times, that had to enhance several times their systems since their introduction, increasing the cost for central banks. All central banks mentioned that in order to improve the compilation and analysis, official statistics, data collection systems have to be reviewed and expanded continually to ensure that the potential data gaps are identified and addressed in a timely and efficient manner. Central banks mentioned that there is a need for a better system to capture granular data and supplemental information to improve national remittances statistics. Yeah, thank you. Next slide, please, Paloma. Thank you. UNCDF conducted interviews with some of the main companies, technology companies, to understand their flexible data collection and software platforms and solutions to improve data collection quality and analysis to enable efficient and effective policies. So over the last year, in general, what we found is that those solutions and platforms allow to fully automate the collection and exchange of all cross-border information in line with international standards. And also that regulatory reporting solutions allow less burden on financial RSPs providers, and they are using the same technology and rules and engine as the central banks have in use today. Also, we will have later today a presentation from Mr. Onizuka from the SWIFT in Belgium, who will share with us more about their platforms and solutions, in particular Swisscope and their experience in collecting and exchanging all cross-border information. And also I wanted to use the situation to mention that on Thursday, we will also have representatives from GVG and BRAC to talk about how they leverage the technology to capture the full potential of the remittances data. This is all over to you, Paloma. Thank you.
Thank you, Ivish. Thank you so much. And I would like to share that we have 100 participants. So thank you so much for your time. And I really encourage you to put questions in the chat. And next is Maria Angelica. Angelica is the Deputy Director, and she's going to share with us the experiences of the Central Bank of the Philippines on compiling data on remittances of overseas Filipinos. So welcome, Maria Angelica.
Hello, everyone. On behalf of my colleagues from the Banco Central, allow me to share with you our journey in recording and monitoring remittances using the International Transactions Reporting System. So next slide, please. Okay, remittances from overseas Filipinos are a major source of foreign exchange inflows for the country. In 2021, personal remittances reached $34.9 billion US, of which cash remittances coursed through banks amounted to $31.4 billion US. both grew by around 5% during the year. So at the right side of the slide, you will that the cash remittances as percentage of various indicators, say for instance, in terms of GDP, as a percentage of GDP, the country's cash remittances is about 8%. And then it's about 30% of the country's gross international reserves, and about 35% of the country's exports of goods and services, and about 300% of the country's foreign direct investments, and more than 300% of the country's debt service burden. So this just illustrates that for the Philippines, remittances play a critical role as a source of foreign exchange inflows for the country. Next slide, please. In the Philippines, the Bangko Sentral, our major source of data for collecting data on remittances is the ITRS, International Transactions Reporting System, which we currently call as FX Form 1 and 1A. So this system actually collects information at the transactional level. So we collect data from banks regarding resident to resident transactions, which involve foreign currencies. And more importantly, it also collects information between a resident and a non-resident, either in the form of either through in the peso or in other foreign currencies. So this is ITRS, which is also an important source of data for us in the compilation of the country's balance of payments data. So we collect directly from banks, and this includes also data from money transfer operators that have accounts with the bank. So we are able to capture not only remittances that are coursed through banks, but also through money transfer operators. And this is the main source for generating our remittances report. However, we recognize that the ITRS has its own limitations. Like for instance, in the BOP, we have to compute for compensation income, or we have to compute for the remittances under secondary income. The ITRS is not sufficient in our case to identify this. So we also use supplemental data sources, such as the survey conducted by our National Statistics Office, the survey is Filipinos. We use this to estimate the remittances that are coursed through informal channels or not through banks, and also remittances in kind. And then we also make use of deployment data from another agency in the country to compute, to help us compute for compensation income. And then we also have, we also make use of estimates on the stock of overseas Filipinos from various agencies. Currently, the Philippines is in the process of still streamlining the official framework and operationalizing the framework on the counting of the stock of overseas Filipinos. So these are supplemental data that we use in the compilation of remittances to comply with the balance of payments framework. Currently, our FX Form 1 is based on the earlier edition of the Balance of Payments Manual and the Consolidated Statement of Condition. In the next few slides, we will elaborate further that on the initiatives being undertaken by the country or the BSP in order to improve our capture of data using the ITRS. Next slide, please, Paloma. Okay, so in terms of regulatory framework and legal framework, you will see here two important regulations that govern our collection of data from the ITRS. Now, since we collect data from the banks, banks are supervised entities of the Banco
entités
Central.
supervisées et elles sont donc tenues de suivre et d'observer.
Tienen que seguir.
For the ITRS, we have the manual regulations on foreign exchange transactions. So these are the FX rules and regulations. So as we know, the ITRS has been used essentially to monitor the foreign exchange flows in the country. And we note also in the earlier discussions that given the capital flows liberalization, sometimes it's getting more challenging for us to collect information through various sources. So another more recent development for the Banco Central, which is actually a milestone for us because the charter of the Banco Central has been amended in 2019, whereby the BSP or the Banco Central is also given an authority to collect information from non-bank and non-supervised entities. So if the purpose of our collection for data is for statistical or policy development purposes or objectives, we will be able to collect, we have already the authority to collect data from these entities. We are just in the process of finalizing our implementing guidelines on this respect. So next slide, please. In this slide, we will see that there are limitations on our current use of the FX Form 1 and Form 1A, mainly for purposes of the compilation of the balance of payments, which of course includes data on remittances. So the first limitation is that ITRS is purely cash basis, since we are able to capture only those that pass through the banking system. No accrual, there's no computation of the actual compensation income of our overseas Filipinos with short-term contracts. And then, as also mentioned earlier, there are risks of misclassifications because there are various account codes in the ITRS where banks can possibly misclassify transactions as foreign direct investments when in fact they are the remittances, or the other way around, or maybe in services or other different accounts. So this is also a challenge, since sometimes in the banks there is a very fast turnover of people handling reporting to ITRS. So as mentioned earlier, there are limitations in terms of estimating other accounts such as compensation income and transfers. That's why we use supplemental data. And for the remittances, there's also a limitation in terms of country attribution due to correspondent banking arrangements. So typically we are able to capture more or attribute remittances to the country where the head offices of the banks are located. So instead of capturing or identifying the source of remittances as directly from other countries, say from the Middle East, sometimes the United States, because the head office of the correspondent bank is located in the United States. So currently, our FX Form 1 is also based on previous editions of the balance of payments. So this needs an upgrade to be able to comply with the more recent standards. And then for the current limitation also, data disaggregation is limited to the by-country level. But currently, we have ongoing initiatives for our new ITRS project. So we are essentially building a new system, a new ITRS, where we are more aligned with the BPM6, and then more granular data will be available. And for remittances, there's already an automatic identification of the distribution channels of remittances. So we'll be able to identify if these are from bank branches, MTOs, or correspondent banks, and so forth. And we also are doing, we have provided a field also to help us identify where in which part of the Philippines are remittances mostly going. So we'll have information on the destination of the remittances to the provincial level. And also part of our initiative to improve our estimation of remittances, we will be doing also a survey on money transfer operators to better understand the purpose of the fund flows. So next slide, please. So what are lessons learned, if we may share with you? First, the legal regulatory framework is really important because it is the basis by which we can ask our reporting entities to comply with our requirements. The way for us to get robust and accurate data is to have firm and valid legal and regulatory framework. And in the course of developing also the new system, we know that it is very important to coordinate with the reporting entities, the banks, and as well as other stakeholders. So we have to coordinate with our IT department, we have to coordinate with the supervision department, and also the others who've been wanting also to get more granular data based on from the ITRS. And third, we have to review all other data needs that will aid in the provision of comprehensive BOP statistics. So we must understand fully the framework that we are following so that we'll be able to address all the requirements. And then another important thing that we learned is we have to know how to prioritize our statistical objectives and to do cost-benefit analysis. Because the purpose of developing our system, for instance, in the case of the BSP, is really to generate data for the balance of payments statistics. But we recognize that there are other requirements, like policy requirements, policy formulation requirements, which may have various needs also and various level of granularity for BOP or remittances data. So we need to, given the limited resources of the bank, we really need to prioritize which ones are the most important objectives that need to be addressed by developing the system. So it's also important that we assess that our current available data sources. So we don't want to be duplicating our resources, and we want them to streamline our data sources so that you will have all a single source of truth for obtaining data on specific indicators such as the balance of payments and particularly on the remittances. So that ends my presentation. Thank you very much. Back to you, Paloma.
Thank you so much, Angelica. I encourage you again, if you have any questions for Central Bank of the Philippines, please put it in the chat and Maria Angelica will be. So now is Maria Mercedes Collazos. She's the lead economist at the Banco de la República. And she is also going to share with us some lessons learned from building an international transaction reporting systems. I would like to share that I have the pleasure to know Maria Mercedes since 2006 on my first ever diagnostic mission to support the field of international remittances. So welcome, Maria Mercedes.
Thank you, Paloma. Well, good morning, good afternoon, and good evening. It's a pleasure to be here, and thank you so much to the UNCDF for the invitation of the Central Bank to share our experience using the ITRS as a data source for compiling external sector statistics. Following slide, Paloma, please. The presentation covers 4 points. Mainly, the first one is related to that, to give a brief overview of the ITRS in Colombia. The second one is describing more in detail how it works, the ITRS for compilation purposes, some advantages and disadvantages that we found that the ITRS could have for compilation of the external sector statistics, and finally some challenges that we are facing regarding the use of the ITRS in order to capture new mechanism of sending remittance across countries. Thank you. This is a general overview of the recent behavior of the remittances inflows in Colombia, it deserves to be mentioned that Colombia is mainly a recipient country in Latin America, one of the most important. In 2021, we received about $8,600 million, representing about 2.7% of the GDP. Is an important source of financing of the external deficit in current account. It represents about 13% of the total current inflows in the current account, and it's also an important source for financing the income of the Colombian households. It represents about 3.4% of the household disposable income, and also an important source of financing of the consumption of the Colombian household. Following, please. Next one. Colombian existing ITRS was introduced in 1919 when the Central Bank of Colombia liberalized the foreign exchange market. Remittances in Colombia are mainly received through the formal foreign exchange market. And this market is, the regulation is the responsible of the Central Bank of Colombia. Financial superintendency is the institution that is doing the supervision of the market. What the Banco de la República rules? It determines the scope of the market. That means the foreign exchange market definition is defined as the market that where all the international transaction carried out through foreign exchange intermediaries, FEI, and the transaction done abroad in deposit accounts registered at the BR. It's who are the FEIs? Commercial banks, credit unions, and financial brokers. Official Postal Office is not a FEI, but under the Universal Postal Law, it's an authorized remittances service provider. Telecommunication companies are not authorized in Colombia to deal with remittances, international remittances transactions. The requirements to be a FEI are mainly related to capital requirements. That means that when institution FEI wants to do a wider range of international transaction, higher capital requirement will be needed. Remittances are in Colombia one of the most important sources of foreign exchange supply in the Colombian foreign exchange market. Next, please. Thank you. Next one, please. Okay. What are the main characteristics of the ITRS in Colombia? It's an open system. That means that we are receiving transactions done through the foreign exchange market, but the consistency between the flow and the stocks, the way that the transaction impacts the position in foreign exchange of the FEI is not validated by the system. It's a validation that took place outside the system for statistical and supervisory purposes. Central bank cross-border transaction is also included in the ITRS. ITRS reports are compulsory in the case of Colombia for banking supervision as well for statistical purposes. We don't have a threshold. Any transaction should be reported to the central bank, and the transactions are reported on a gross value way. Colombian ITRS covers position and transaction data in the case of external debt, direct investment, and portfolio investment done in the local market. The characteristic, what are the data that we receive through the ITRS? Next one, please. This is an example of the form that the central bank has issued for reporting remittances, services, and in general, the current transfer. We have about 20 different forms depending on the kind of transaction that should be reported. Well, thanks to the ITRS, we are able to know who is the pay that is receiving foreign exchange intermediary that is done intervening in the transaction, the ID of the pay, the name of the beneficiary of the remittances, the ID. It does have to be mentioned that the ID in Colombia is a unique identification number. The details allowing us to identify the beneficiary information like the telephone, the address, the city when the recipient is living, and all the details regarding the transaction. The amount, the original currency of the remittances, and thanks to the use of codes, we can identify the economic classification of the transaction according to the BOP definition and the total amount. These are the details of the information. Why it's important, the ITRS for the compilation of remittances in Colombia? Because it covers about 98% of the total remittances that are estimated in the balance of payments. We receive data on a daily basis, gross value, transaction by transaction information. This ITRS report, thanks to the regulation, is supplemented by a quarterly report that is received on a quarterly frequency. And with this additional report, we are able to know what are the main countries that are sending remittances to Colombia, and also in the sending side, which are the countries that are receiving remittances from Colombia. Also, we know the beneficiary, sorry for the mistake, the beneficiary regions in Colombia, remittances cost, remittances service providers like Western Union, MoneyGram, etc., and the mode of payment. It's the remittances is paid in a deposit account or in cash or any other method of payment. Thanks to these are also the remittances transacted to informal channel are estimated thanks to a survey that provides us the information that about 2% of the total remittances in Colombia are received through informal channels. This is some examples of the information and that we receive through the supplementary report. Next one, please. Country of origin, mainly United States, region of payment. Recently, we are able to know what specifically, what are the city and even the town in Colombia that are receiving remittances. The remittance pay mode, mainly remittances in Colombia is paid in cash, but there is an increase in importance, the blue line of the remittances paid in accounts, the foreign exchange market share in the market, and remittance sending cost. Next one, please. Advantage and disadvantage. Main advantage, as we have already described, is that we receive gross value remittances data, transaction by transaction approach, are crucial according to our experience for a better data quality assessment. Thanks to this characteristic of the information, we can do a monthly assessment of the frequency and the average value of the remittances per recipient. Outliers are identified, validated, or rejected on a case-by-case basis. Number and amount of the remittances are also checked, and detailed data allowing to identify new and older recipients of remittances are also identified. Sorry. This is the kind of exercise that we do each month to validate the data that is reported through the ITRS. We do a statistical analysis. We know the distribution of each of the remittances. We validate the outliers, the average, and when for example, a remittance is greater than $1,000, we do an additional validation process. We are able to characterize if the recipient is an older one, the blue line, or a new one, the orange line. Previous one, advantages. Thank you. Thanks to the fact that we are able to identify the ID of the remittance receiver, the ID is a key element allowing us to do cross-checks against different data sources, like income, household survey, in order to assess the impact, the micro impact of the remittances in Colombia. Administrative records, like the ITRS, provide a more accurate information than other data sources according to our experience. For example, we have tested that surveys regarding income tend to undervaluate remittances compared to the ITRS. And also administrative records assure a better coverage at a lower cost. ITRS is a census, and that's why we consider that have provide a better coverage for statistical purposes. And a detailed ITRS, such as the Colombian system, is one of the key elements for the supervision of the foreign exchange market. In the case of Colombia, we are talking about money laundering supervision. Thank you. The next one, please. Disadvantages, and it's mainly due to the trade-off between ITRS efficiency based on a minimum data requirements. We are thinking about, for example, the mechanism proposed by some services, remittances providers like Visa Direct, that is based on aggregate data. They offer a quick service, but the trade-off is that the data tend to be aggregated, and better statistics based on a detailed frequent ITRS information. Higher data requirement also implies a higher cost either for the data provider and also for the data user. The central bank has to deal with an important number of transactions. In Colombia, it's over 30 million of transactions are related to remittances. Then it's a big issue to see how to store this information and to analyze in a quick way using technology. And ITRS does not capture remittances carried out through the informal channel. And currently, Colombian ITRS is not capturing information about cross-border remittances drawn done through new remittances providers and different from the one that are currently included in the ITRS report. Banks, credit unions, and brokers, and new sending mechanisms are not also well covered by the ITRS in Colombia. Next one, please. And according to the Colombian experience, better statistics for better policy is a principle that depends on the soundness of the regulation, a clear definition of who and how participants can intervene in the remittance market are required. Legal support for statistical production is a key condition for having to not only to access to the data required for the compilation, but also for the quality of the information. A good coordination between the regulators and the statistician is also required. In the case of Colombia, any change of the regulation should or are currently discussed with statisticians in order to assure a minimum impact on the possibility to build good statistics for the compilation of the stagnant sector activity. And the source of information to be used are dependent upon the characteristics of the regulation and the remittance market. ITRS, according to our experience again, is a good instrument to capture cash flow transaction and digital and remittance e-money transfer done, for example, through the telecommunication companies, maybe should be covered, including these services provided into the ITRS system or accessing them through supplemental reports as the one that we have already described. Informal channel, best way to capture information are the surveys, and different sending mechanisms and payment instruments requires a combination of data source. In the case of Colombia, we are exploring a new technology related called RegTech SubTech technology that mainly offers following slide, please. What? Excuse me.
Sorry. Yeah.
Why it's interesting to explore this option? Because all the information produced by, for example, a financial institution could be transformed into computing languages, and by means of artificial intelligence and machine learning technology, the data could be analyzed and the final result could be transmit to the regulators and policymakers in a faster way to allow them to make decisions as soon as the information is processed. Alert are sooner, as well as reaction from the authorities. This is a mechanism that will be analyzed by the Central Bank of Colombia in the future as an instrument for statistical purposes and also supervision and policy decisions. And that's all. If you want to see additional information regarding the methodology and the way that the ITRS works in Colombia, we have posted the link and also document the link of a document that explains how we deal with the data to build an econometric model that we use for forecasting purposes. Thank you so much. I leave you the floor, Paloma. Thank you.
Well, thank you so much, Maria Mercedes. I apologize, we are a little over time, but I would like now to give the floor to Mitch. So Mitch Onizuka is the Senior Business Manager Swift. So over to you, Mitch.
Thank you, Paloma. And on behalf of SWIFT, I would like to thank UNCDF for giving us the opportunity to present SWIFT Scope solution today. I am conscious of time, so I think we will have to go quickly. But if you have any questions, please don't hesitate to reach out to us later. If you can go to the next slide, please. SWIFT Scope, for those who are not familiar with the SWIFT, as it was briefly mentioned, the SWIFT is actually a global member-owned cooperative with its messaging services used by more than 11,000 financial institutions in more than 200 countries. So as you can imagine, we have a vast amount of data that are carried over the SWIFT network. If you can go to the next slide, please. And the kind of the data we are talking about is that FIs exchange over the SWIFT network contain information, as you see here, the volume, value of payments, counterparty countries, currency, and then also like the channels through which they transact with their correspondents. Next one, please. And where the SWIFT Scope comes is that the SWIFT Scope is actually an integrated business solution. That means that it is comprised of three components: data collection, data transformation, and data visualization. And the data collection is actually automated through the SWIFT network messaging service. So whatever the cross-border flows or payments or remittances that are exchanged by the banks or their FIs over the SWIFT network are captured automatically as they are transacted and copied to the central bank. And once the messages arrive at the central bank, they are being parsed or integrated into their central database, which sits at their own premises, the premises of the central bank. So it's not like a data that is at the SWIFT network. It's sitting locally at the central bank premises, and then we provide the visualization software to access the database to provide some views and analysis of the data that you have received. Next one, please. And in terms of the modules, we have various set of predefined set of dashboards that are available for analysis and the reporting. And here you see examples from international domestic payments as to treasury operations like foreign exchange, interbank lending, as well as the statement analysis based on the bank statements and customer statements, and also the trade finance. So we have these the modules that are available already. And the next one, please. And the last slide I just wanted to share with you is some of the use cases that we have today. And by the way, the earlier slide indicated that there was a country that is using SWIFT Scope as UAE. And just for clarity, UAE is not the only one that's using the solution today. We have, in fact, globally around 25 central banks using the solution. But the UAE is there because we are not authorized to actually publish the names of other central banks unless we are authorized to do so. UAE actually they have published their implementation practice in their public domain in the website, and their main driver was more on the balance of payments and to automate it and then also reduce the errors and omissions. And obviously, it's not the entirely complete solution. It's just a supplementary or the one data source that is helping the Central Bank of UAE to have a better calculation of balance of payments. And in other cases, like we have also central banks using the solution for the banking supervision purposes, in particular for AML and CFT or CTF. And other central banks also are using it for the foreign exchange market, interbank lending, for example, to better understand the uncollateralized interbank exposures that you may have in the domestic market. So there are various, obviously, various benefits or the relevance that the central banks can use the solution for, and then it really depends on how each central bank would like to deploy the solution for. But I think in the end, I just wanted to highlight the fact that the important point is that all this is closely linked, and I think having just purely the data the quality data in a timely way is really the most important. And by doing this automation of the data collection, the key benefit of this is that central banks will be able to monitor and analyze all the activities or market activities on a real-time basis as the messages are copied on a real-time basis. Thank you. That would be my presentation. Thank you again. Back to you, Paloma.
Thank you so much, Mitch. I mean, we're not going to have time to answer the questions, but some of the questions have been already answered in the chat from my team, but we will be sure that go back to you with questions. And so maybe first and foremost, I would like to express my appreciation to the speakers and the panelists for this contribution to our first webinar. So in my capacity of facilitator of this event, I thought it would be appropriate and useful to summarize 3 ideas from this webinar. First, I think the webinar has been very effective on meeting its purpose. So which is an overview how an ITRS as a tool can help developing countries in better measuring remittances, but also that it's an ongoing process. So you have to be flexible and you have to upgrade and have enough resources. We also have discussed the challenges from 2 central banks for compiling cross-border remittances, but also what is next and how business intelligence solutions and automation focus on the data collection and analysis are helping the needs of central banks or financial regulatory authorities with different use cases. Could be money laundering, could be foreign exchange, could be consumer protection. And there were a number of questions raised to the panelists. Thank you so much. And if you have any other question, please don't hesitate to contact us, migrantmoney@uncdf.org. Before ending my closing remarks, I would like to convey a special thanks to the interpreters who've been extremely helpful. And also tomorrow, we will have the Central Bank of Mexico and the Central Bank of South Africa and Spain, as well as TerraPay. I would like to share that tomorrow is going to be 2 ITRS with distribution, financial inclusion, and also with a gender component. So I will see you tomorrow, and thank you so much.
Thank you.
Thank you.